Steve Jobs, the guy who made Apple what it is today, started from pretty humble beginnings. He wasn't born to rich parents or in a fancy neighborhood. Instead, he was adopted by Paul and Clara Jobs, a hard-working couple living in Mountain View, California. The place wasn't anything fancy, but it was close to what we now know as Silicon Valley. From the get-go, Steve was a curious kid, always messing around with electronics and gadgets thanks to his dad, Paul, who was pretty handy himself. School was a bit of a mixed bag for Stevie. He went to Homestead High School and met his future Apple co-founder Stevie Wozniak, but he wasn't too thrilled with the whole school system. It felt too restrictive for him. He was looking for something more, something that really spoke to him. After high school, Steve gave college a shot at Reed College in Portland, Oregon. Reed was known for doing things differently, which Steve liked. But seeing how much it was costing his adoptive parents, he couldn't justify staying there and quit after just one semester. Even though he dropped out, he didn't stop learning. He hung around campus, dropping into classes he liked, such as calligraphy, which would later influence Apple's design. Quitting college wasn't the end for Steve. It was just the start of something new. He wasn't about to let traditional paths dictate his life. He was all about chasing his passion, pushing for innovation, and believing in the power of what could be. Talking about Steve's family, they weren't rich, but what they lacked in money, they made up for in support and encouragement. They gave Steve a solid base, a chance to explore, and the freedom to follow his gut. These were the real riches that helped shape the guy who would co-found Apple. Steve's story from tinkering in his family's garage to becoming a tech icon is really a tale of never giving up, dreaming big and daring to be different. He saw a future where technology wasn't just about fancy gadgets, but something that could genuinely make our lives better. And boy, did he make that vision a reality. Steve Jobs' journey from a curious, innovative child to the co-founder of one of the most successful companies in history is a tale of ambition, resilience, and groundbreaking vision. This narrative does not start in the gleaming offices of a tech giant, but in the more modest settings of early Jobs that shaped his understanding of technology, design, and business. Jobs' very first job was at Hewlett-Packard, where he worked during his high school summer breaks. At HP, he was exposed to the cutting-edge technology of the time and to the corporate culture of a pioneering tech company. Although specific details about his salary at HP are scarce, it's reasonable to assume that as a high school intern, Jobs would have earned close to minimum wage, which in the early 1970s in California was around $2 per hour. This experience was crucial, not just for the technical knowledge he gained, but for the networking opportunities it afforded him, including meeting Steve Wozniak, who would later become his business partner in founding Apple. After his brief stint at Reed College and his transformative trip to India, Jobs returned to California and took a position as a technician at Atari, a leading manufacturer of arcade games. Atari was at the forefront of the video game industry, and Jobs' role involved troubleshooting and creating new games. His work at Atari was significant for several reasons. It honed his technical skills, introduced him to the realm of digital entertainment, and helped him understand the importance of intuitive design. At Atari, Jobs is reported to have made around $5 per hour, a decent wage for the time and a step up from his earlier work at HP. It was during his time at Atari that Jobs started to seriously think about starting his own company. He saw the potential for personal computing to become a major force in society. Along with Wozniak, Jobs embarked on a project that would eventually become the Apple I computer. In a famous story, Jobs sold his Volkswagen van and Wozniak sold his HP calculator to raise the $1,300 they needed to start Apple. The launch of the Apple I computer in 1976 marked a pivotal moment in the history of personal computing, heralding the arrival of Apple Inc. as a significant player in the technology industry. Crafted by Steve Wozniak's technical brilliance and Steve Jobs' visionary entrepreneurship, the Apple I was not just a product but a symbol of innovation and accessibility in computing. The Apple I's production began in the Jobs family garage, a humble yet iconic start for what would become a global tech empire. The initial investment was modest, with Jobs and Wozniak pooling their resources. To finance their venture, they also secured credit for parts with local suppliers, demonstrating early on their ability to innovate not just in technology but in business strategies as well. At the time of its release, the personal computer market was nascent, with few players. The Apple I stood out because it was one of the first personal computers that did not require the user to assemble components. It came with a fully assembled motherboard, a stark contrast to the kit-based computers of the era. Users only needed to provide a case, power supply, keyboard, and display. This level of integration was revolutionary and significantly lowered the barrier to entry for personal computing, making it more accessible to enthusiasts and hobbyists who were not necessarily electronics experts. The Apple I's popularity soared due to its innovative features and the burgeoning interest in personal computing. Priced at $666.66, a figure set by Jobs partly because he liked repeating digits and partly due to the markup strategy, it was affordable compared to other computers of the time, which contributed to its rapid adoption. The unique pricing also ensured a healthy profit margin. In its first year, Apple sold about 200 units of the Apple I, generating significant revenue for a startup. While exact figures vary, the sales from the Apple I and its successor, the Apple II, launched in 1977, quickly propelled Apple into a profitable venture. The Apple II in particular became a massive success, selling millions of units and becoming the primary growth driver for the company. Steve Jobs' share in Apple and his net worth grew exponentially with the company's success. The initial sales from the Apple I contributed to the company's cash flow, but it was the success of the Apple II that truly accelerated Jobs' path to becoming a millionaire. Given the rapid growth of Apple, Jobs likely reached his first million in net worth by the late 1970s to early 1980s, as Apple's valuation soared, especially after its initial IPO in December 1980. The launch of the Apple I computer was a landmark event that set the stage for the personal computing revolution. Its innovative design, competitive pricing, and the visionary leadership of Steve Jobs and Steve Wozniak not only made technology accessible but also established Apple's foundational principles of innovation, quality, and user-focused design. The success of the Apple I and the subsequent Apple II laid the groundwork for Apple's future successes, making it one of the most valuable and influential companies in the world. Steve Jobs' journey from a garage in Los Altos to becoming a millionaire was not just a testament to his entrepreneurial spirit, but also a reflection of the transformative power of technology. The development of the Apple II marked a seminal moment in the history of personal computing, significantly advancing the industry and establishing Apple as a leading innovator. Following the modest success of the Apple I, Steve Jobs and Steve Wozniak set their sights on creating a computer that was not only more powerful but also more accessible and appealing to the general public. The Apple II was the product of this vision, and its launch in 1977 was a watershed moment that would catalyze the growth of Apple into a tech powerhouse. The difference between the Apple I and the Apple II was night and day in terms of both design and functionality. While the Apple I was essentially a circuit board, the Apple II was a fully assembled computer that came in a sleek plastic case. This made it one of the first personal computers to have a recognizable and user-friendly design. Furthermore, the Apple II featured color graphics, a significant upgrade from the monochrome outputs of its predecessor, and came with an integrated keyboard. These improvements made the Apple II far more attractive to a wider audience, including schools, businesses, and hobbyists. The Apple II was launched with a starting price of $1,298 for the base model, which included 4 kilobytes of RAM. This pricing strategy was competitive, making it accessible to a broader market without sacrificing profitability. The sales of the Apple II in its initial years were nothing short of phenomenal. In 1977, Apple managed to sell thousands of units, a significant achievement for a fledgling company. By 1978, sales had skyrocketed, with Apple selling tens of thousands of Apple II units. This exponential growth in sales was a clear indicator of the Apple II's widespread appeal and its pivotal role in the personal computing revolution. The success of the Apple II had a profound impact on Apple's financial health. From a revenue standpoint, Apple's growth was explosive. In 1977, Apple's revenue was around $2.7 million, a substantial figure for a company that had just launched its second product. By 1978, this number had jumped to approximately $7.8 million, showcasing the Apple II's impact on the company's bottom line. As for Steve Jobs' net worth, the success of the Apple II significantly increased his wealth. Though exact figures for these early years are hard to pinpoint, it's clear that Jobs' share of Apple's success translated into millions of dollars, setting the stage for his eventual status as a billionaire. Ever since Apple started, its growth story has been pretty wild. Imagine this. Back in December 1980, when Apple decided to go public and sell its shares for the first time, each share was going for just $22. Fast forward to today, and it's clear that anyone who bought Apple shares back then would be laughing all the way to the bank. That first sale was a huge deal and made a bunch of people millionaires overnight, more than any other company had done before. In the beginning, Apple's value kept going up slowly but surely, thanks to awesome products like the Apple II computer and later the Macintosh. But the real game changer came when Steve Jobs, one of Apple's founders, came back to the company in 1997 and started rolling out hit after hit like the iPod, iPhone, and iPad. These weren't just cool gadgets, they completely shook up the tech world and made Apple a ton of money. One of the first big-time supporters of Apple was a guy named Mike Markkula, who threw in $250,000 back in 1977. That was a big chunk of change that helped Apple grow in its early days. Since then, loads of big investors and regular folks have bought Apple shares, banking on the company's knack for making products people love. Lately, Apple's value has gone through the roof. The company hit a $1 trillion value in 2018, doubled that to $2 trillion in 2020, and by 2023 it's been flirting with the $3 trillion mark. That's trillion, with a T. It's a massive number that shows just how big Apple has become. This growth isn't just about making cool phones and computers. It's about Apple changing the game in tech and keeping customers hooked on its products. Watching Apple's journey from a small startup to one of the giants of the tech world really shows what can happen when you mix big ideas with solid leadership. Apple's stock price has experienced an incredible journey from its IPO in December 1980, when shares were offered at $22, to its current status as one of the most valuable companies in the world. The difference between the stock price then and now is staggering, showcasing Apple's monumental growth and success in the tech industry. From $22 to over $170, that's incredible. Over the years, Apple's innovative products like the iPhone, iPad, and Mac have transformed the company into a tech powerhouse, propelling its stock to great heights. Warren Buffett, the famed investor and head of Berkshire Hathaway, made headlines when he began investing heavily in Apple. Buffett's significant investment in Apple started in 2016, a period when Apple's stock was already highly valued compared to its IPO price. At the time of his initial purchase, Apple's stock was trading at around $109 per share. Buffett's investment strategy, often focused on undervalued companies with strong fundamentals, saw immense potential in Apple, not just as a technology company but as a strong consumer brand with a loyal customer base. Buffett's decision to invest in Apple has paid off handsomely, with Berkshire Hathaway's stake in Apple becoming one of its most valuable investments. This illustrates the massive growth Apple's stock has undergone, from its humble beginnings at $22 per share to becoming a cornerstone investment for one of the world's most respected investors.